Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, so now that the intro is done, let's unmute. Alright guys, so we are recording and let's take a quick look at the market. So starting off with the news that's coming next week, we have on the 14th the CPI data. So this is going to be huge. Okay, we're going to get a lot of big info here starting on Monday or Tuesday I should say, and this is definitely this is going to give us a good forward guidance on how the Fed's going to start reacting to the news going forward. How hawkish are they going to be? Now, we do have some hints that they are likely going to raise 0.5 points. So that is a slight increase over the last hike rate they've done. So they are feeling a bit more hawkish of late, which is not surprising considering how strong the economy has been relative to the inflation. Okay, so watch for the Fed continue that hawkish stance, and the CPI numbers will pretty much vindicate that, or maybe even cast some doubt if these do perform better than expected. Okay, if we show any signs of inflation topping in these numbers, that's going to be a very good sign for the Fed to maybe particularly feel good about not raising rates faster, or at least not raising in higher percentiles. Okay, and then later on that week, the 15th, we have retail sales, we have the crude oil inventories, and then the 16th is going to be another big day because you're getting the initial jobless claims, the housing stats number. So you're going to get a good idea of, are we getting more people working? Are we getting an increase in joblessness? We're going to find out. And obviously the housing starts number is going to be great, because if you're looking at the real estate market, you want to see if there's signs that it's finally turning over on itself, because it's been a very, very hot sector pretty much since 2020. So we are on alert to watch if real estate is going to finally keel over on itself, and hopefully it becomes a buyer's market rather than a seller's market like it has been for like the past 2 years. And then March 17th, we have industrial production month over month and the University of Michigan sentiment. So I always tell people, do not underestimate the Michigan sentiment. This is actually quite important. It's very well respected, and they tend to be pretty on top of the ball. Okay, they tend to have a pretty good idea of how the market's sentiments are going to be going forward. So they're a great forward guide sort of tool to use. So we'll definitely keep our eye on that on the 17th, and I believe that is it for this coming week. So again, March 14th is going to be the first big day. Now let's get into the big news that's coming out as we speak. So if you've been following the markets, pretty much Silicon Valley Bank has gone under. It is now being trying to be controlled by the government. They have a lot of issues financially, and essentially, unfortunately for the crypto market, USDC, so US dollar coin, and this is controlled by Circle. They have a lot of their, well, I shouldn't say a lot of their assets, but they have assets. They have wealth tied to that bank. So they did have a bank account. They did have exposure to that bank. Now, I don't have any confirmations on how much was exposed. I have seen different reports. Some are saying that they've had about 8% exposure to Silicon Valley Bank. Some have said it's less. Some have said it's more. I don't know, but I have seen more commonly 8%, 6 to 8% seems to be the consensus as of now. Okay, so if that is true, it sucks that they have any exposure, but it's not the end of the world per se if it really is 6 to 8%. If that's the case, I do believe, given some time, Circle can get the peg back to 1-to-1. Okay, now if it's more than that, then there's a good shot we're not coming back for USDC, and it will continue lower and eventually become irrelevant and break down. Now, what happens to the markets if that happens? Well, if that happens, we're gonna see a momentous sell-off and a lot of assets. Maybe not all of them, but a lot of assets. Now, USDT, US dollar tether, is far bigger than USDC, but USDC has been the alternative to USDT that's been growing in popularity more and more and more. So they do have a good chunk of market share when it comes to the stable coin market, but they still aren't the king. So it's not as big a deal as if Tether was going down. However, if you take a look at what's going on with Tether because of USDC, it is a bit concerning. Okay, so Tether is actually exploding up because people are transitioning out of USDC and they're going into Tether. Now, the reason why this is a problem, if we get too big of a movement going into Tether, and then those people wish to get out of Tether in the short term all at once, this can cause a chain effect where it's going to look like a run on Tether as well. So people who have been sitting in Tether may also follow suit, and you pretty much get the essence of a bank run. Okay, so we have to be very careful here. We have to be very patient, and we have to stay vigilant, because we want to watch how USDC is going to perform over this next week. It's very important this next week for Circle to get things under control, and then we want to see how much is Tether going to inflate and how fast will it deflate. Okay, so this is going to be a big week, and this cannot go on for long. Okay, I am warning right now, USDC must get this peg under control within this week. If they don't do it within this week, there's a serious problem, and it would call into question, at least in my opinion, it would call into question how much assets they actually had exposed to Silicon Valley Bank. Okay, so again, be vigilant, be patient, and this is why I always say be nimble. Never put yourself in a position where you can't actually move around. Okay, it's okay if you lose some money. Never put yourself in a position where you're going to lose all your money at once. All right, so a quick announcement. If you are in the swing trade service with me, obviously you know we have a bunch of positions. We have exposures to a bunch of different cryptos. I've already put out a message that I'm going to keep my positions open for now. I'm not doing anything in deleveraging it or anything like that. But I am going to be very slow on how I add on going forward. Okay, I have a good chunk of my account. About half of my account is exposed. Some coins have 7% exposure, some have 2% exposure. So it varies between them. But I'm okay personally with losing that amount, over a period of time, where I'll probably lose anywhere, if we get into like the Armageddon scenario, 20-30% of my account for me, because of all the profits I've made over this year so far and last year. Now, you may be in a different situation. That's why I did say in that message, be very careful. Okay, if you have too much exposed, consider deleveraging, de-risking yourself, even if that means closing in slight losses. Okay, because it's best to be able to sleep at night. If you have too much exposed and it's causing you to have an issue where you can't live life, that means you have too much exposed. Okay, I don't know what's going to happen with USDC. If the numbers are true, where it's only 6 to 8%, I do believe that they have a good shot of getting things under control. If that's not true, then they're not coming back. Okay, and if they're not coming back, I can promise you there will be a major sell-off. Okay, there will be. All right, that's it for USDC. Again, if you have more questions about that, make sure you join the Discord. I do live streams all the time. Like currently I am doing, this is a live overview of the market. So if you are in the Discord and you haven't joined these, make sure to do so. That way you can get real-time thoughts from me and ask your questions, and also share anything you want to share. And if you haven't joined the Discord, you'll find the link in the description below. Now let's get into the charts. So starting off with Dixie. So we actually had a pretty nice retracement back on the Dixie for Friday. So it's been playing out pretty well. I will say so far it's underperformed, in my opinion, what I expected of it. Again, it still has a good shot actually of still kind of popping up again. All right, but it is showing signs that we may just pull back here. Again, this is the ultimate level I saw it getting to, whether it came up first like here and broke down. In the end, it's coming back towards this daily bullish fair value gap and that ascending trend line. In the end, I am still looking for some minor upside as we come to this level, and then we'll probably fall into a consolidation over on the 4-hour time frame, and probably a very small one on the daily that will likely have a bearish bias that will try and break this ascending trend line to get us to the monthly bullish fair value gap. Okay, so I am looking for a bounce up from these levels. that may eventually lead to a consolidation that will get us the fuel to break through to eventually look to take out these lows and then get back into this monthly bullish fair value gap. Now, that may happen considering this week if we continue falling, or it may happen after we get up into this monthly bearish fair value gap. Okay, in the end, it's the same. I see it being the same path, whether we're going up or down. We're gonna eventually make our way back to 100, maybe sub 100 even. Okay, but other than that, the dollar's been performing overall as expected. I have been noticing that the inverse relationship with the dollar and crypto seems to have weakened quite some bits. But this is not the first time this has happened. This tends to happen over a small period of time where you'll have relative weakness in the inverse relationship with the dollar. Now, I have also noticed there is some weakness in that relationship with the US indexes as well. So dollar going down usually leads to the indexes, the Dow, S&P, and NASDAQ to go up, or at least have mitigated selling pressure. That's not been happening either. As you can see, we closed off pretty bearish, pretty negative on Friday, just like we did on the dollar. So that's more rare than from what I've observed. But in the end, it will likely correct itself. That relationship will probably get back to normal where it becomes inverse once more. There are these times in the year or years where you will find things that work inversely to each other will sometimes start working in tandem, but it never is long lasting. Okay, so now let's take a look at the Dow, S&P, and NASDAQ. So Dow finally broke the level I've been waiting for right here. It's making its way towards my ultimate target zones of these bullish fair value gaps here, and really this descending trend line. Okay, so it broke this descending trend line bullish, so it's finally making its way to the place where it's most probable it's going to make a higher low. Okay, so we're going to finally get our answers coming soon. Is this rally that we were going through going to be something that has actual legs and lead to continuation to the upside, or was this the bear market rally and this is all we're going to get? And now once we break down here, instead of going up to new highs over a period of time, we're just going to consolidate and then break down further and have a continuation of the macro bear trend. So a lot of the questions that we have are getting very close to being answered. So we just have to continue to be patient, but there's a very high likelihood, even if this is not going to lead to upside, it's very likely that this will lead to a slight bounce to make a lower high at least before continuation down. If this does lead to a bounce and then we get a bullish consolidation, there's a good shot that consolidation is going to try and target the highs of this level, and then we're going to be looking at these pivots up here as the next target. Okay, again, very far off. We're not near there yet. We're just mapping out what may be. But overall, it's been working out as expected. Broke this triangle bearish, came back to about 32,400, 32,500, bounced back into the bearish fair value gap, tapping the structure, broke bearish, and then immediately continuing down. So it's been following the path overall. We're just going to keep observing, and we're going to keep mapping out all the possibilities and keeping the probabilities in the front of our mind. Next is S&P. S&P, very similar movement as well, had a nice pull up, filled pretty much this bearish fair value gap, and came back towards the descending trend line here. Now this isn't drawn perfectly, there we go. So came back towards the breakout trend line here. As you can see, it's wicked around off of it. It's currently closed on top of it. Now I don't believe it to hold, one-to-one. I do think that it's very likely we do take out these lows here to grab any liquidity that's pulled under here, and there will be plenty. And once we do something like that, I would then look for a move up to then try and make a higher low from the lows here. And then we'll see, are we going to go into what kind of consolidation? Now, it's very unlikely, just like with the Dow, that we make this low and then immediately take the highs out. That's one of the most unlikely paths we have. Just like with the Dow, it's more likely you go into a consolidation, making a lower high, and then making a higher low, and then we have to see what the nature of this consolidation is. Now, what I like to see is if it's a bearish consolidation, we'll make a lower high, a higher low, and then we'll make a slight higher high, we'll make a higher low, and we'll do something like this, a rising structure of some sort. This tends to have a bearish bias once you break a previous uptrend structure. Okay, so once that's broken, this tends to be a bearish structure that will eventually lead to continuation lower. Now the opposite is also true. If you see something after a bearish structure, you take out the liquidity under these lows, and then we get consolidation where we make a lower high, make a low, higher low, and then a lower a lower high, and then a lower low. So we have this descending structure. This tends to have a more bullish bias to then lead to more upside. Okay, so we're going to watch this very, very closely, and considering whatever type of consolidation we may get, we may be able to identify what kind of bias we should be looking for in the coming weeks to months. Okay, next is NASDAQ. So NASDAQ, most extended of the three, came into the green zone here, tapped into this bearish fair value gap, and immediately got denied. In my opinion, it's just making its way slowly down to this bullish daily fair value gap, and then possibly even taking out the lows here at 11,200, 11,250. And then same thing with the S&P, with NASDAQ. If it gets to those levels, look for it to take it out, and then look for a short-term reversal. All right, next is oil. So I've been warning oil super bullish, but currently still trading in my tightening structure. So not much has changed, day to day, week to week. We are still within this structure. It's just my doodle of a triangle, but in the end, it does look bullish, especially as you look into the higher time frame. So my bias on it has not changed. Once we get a decisive breakout to the upside on this structure, look for 85 to be the first major target, and then eventually even 90. And then as the year goes on, you may even see higher, but we will cross those bridges as we get to them. If this should break bearish, okay, which is always a possibility, then look for a move eventually back to 60. Now 60, in my opinion, is extremely powerful, and I had marked early last year that pretty much 85, 75, and $60 per barrel were the key levels to watch. We did reach 85, we have reached 75, we've been trading around 75, and $60 is probably the highest demand. So if we get to this level, I would look for this to hold, and I would look for this to start building out a much longer term bottoming structure that will ultimately lead to major upside. Okay, next is gold and silver. So gold came right into the 1800s, so 1810, 1812, 1805, came right into the circle zone. You know what, let's actually get rid of the doodle here, because I think we have hit it. So it's pretty much performed as almost as expected. We'll also get rid of these lines here just to keep the chart clean, and it's bouncing off of a major level. Now it is coming in, it's doing as expected, so I am looking for it to come into this daily bearish fair value gap. Once we get into here, there's a good shot that we do slow down. Okay, there's a good shot we do slow down, and that we will retrace back. Now, retracing back down to 1800 is unlikely. What's more likely to happen is we come into here, and then as we come into here, we start to roll over. And if it's going to be very bullish, okay, if the dollar's going to start weakening and it's going to be very bullish, watch for gold to start consolidating with a downward drift. And this is going to likely it's going to be an attempt to take out these highs. Now, it's going to be very hard, because for gold to get back towards the 2000s is going to be a big deal geopolitically, and also production wise in industry and such, and products. So this is going to be a big deal if this actually does occur. It's more likely, in all honesty, that we do come to this level, fail, and then retrace lower over time, taking out 1800 and getting back towards the 17s. That is the most likely path. It's not super high probabilities on that end, but it is the most likely, so I must share that. But we definitely may get this bullish structure if the dollar does weaken out as it's coming into that this ascending trend line, and potentially even breaking under. Okay, so we do want to watch that, but this is going to be the level where I would look for at least a short-term pullback or a continuation of retracing this absolutely incredible rally. Okay, so even if we do pull back all the way down here, it's still bullish overall as a structure, as long as we don't take out these lows, and that we do try and create a higher low structure anywhere around these zones here. That does have a significant powerful base to have continuation to the upside. Next is silver. So silver broke down as well, and so far is playing out again, as expected, we've been very blessed that a lot of the assets have been following our general thoughts. So it's not that, I'm super good at charting, but it's just been a very good start to the year. All the assets have been performing as expected, and that's always nice to see. Can't always bank on that, but it's good because it helps us, really make, I would say, wise decisions and have a good handle on the markets, the feel of the markets. And so far, it's been happening pretty well. So silver broke down, came into the bullish fair value gap and this ascending trend line. And I have said, this ascending trend line is very unlikely to hold. I don't draw these trend lines as levels to, target or as levels that, are likely to hold or in that sort of scenario. I don't use the standard way of using trend lines. I use them more as like mental markers of, the angles of trends. And again, I get into the importance of angles and trends in my tutoring service. So if you're interested in that, make sure to check that out. But angles of trends are super important because it gives you the idea of the health of a current asset at the time. And right now, this angle is fairly steep. It's not the steepest, but it's not likely to hold long term. It has held generally as it is overlapping with this bullish fair value gap. Now, we are looking for some more upside. I am looking for some more upside back towards about $20 to 99 cents to $21, maybe even higher, going towards $21.50. But once we get towards that, I would then look for a rollover back towards this trend line, especially as I do think gold will go lower, and then this trend line to break, and then eventually we get ourselves back towards the 18s, maybe even sub 18 as well. Okay, so I'm liking what I'm seeing from silver. I'm still short-term bullish on silver and gold, but midterm I am looking for them to roll over as they get closer towards these general resistance zones, these these liquidity levels, and then pulling back off of that. Okay, let's now get into Bitcoin. We're going to talk about Bitcoin, and this is going to be pretty interesting as well because again, Bitcoin is being affected by the whole USDC fallout. Again, we don't know how bad it's going to get. But right now it seems to be fairly under control. Okay, it seems to be fairly under control. So I don't want to bring fear and panic to anyone. It is a serious situation. Okay, you gotta take it seriously. But as of right now, it seems to be under control. We're gonna find out a ton more next week as everything opens up again. We're gonna find out how much exposure does other banks have to Silicon Valley Bank, and that's gonna be a big deal. And we're gonna really get a good idea of what cryptos, whether it's just USDC or anything else, may have exposure to this and to what degree. So right now, it seems fairly under control. Bitcoin has respected this daily sell side liquidity zone, tapped the liquidity, and pulled up pretty objectively, pretty decisively from there. And we're gonna see, can we somewhat stay stable over this weekend and potentially start consolidation here. Now, what kind of consolidation will we get? I think it's going to be very dependent on what happens next week. I will be looking for a small bounce up higher, considering no major news comes out, maybe back to 21.5. Once that happens, we'll be on alert for any pullback to the lower levels towards pretty much like 19,500, and we even did wick down towards that level during last night. I should say yesterday, and it's off the back of the kind of the panic that was brewing during USDC. So we're gonna see how this all plays out. But so far, Bitcoin has been respecting the liquidity levels, so we're just gonna keep trading that way. As you know, if you are in the swing trade service, I did open up a new Bitcoin position. Again, it's a very small position. Gonna take my time with it, but we are slowly starting to build a position in Bitcoin. But if we get more news about USDC, I will be looking to not build that position as fast. I'm willing to kind of just sit around and let the dust settle and see what's going to happen. Okay. But overall, Bitcoin looks pretty good to have a slight bounce or at least trade sideways over the weekend, maybe even early next week. And then depending on the bias, we could definitely see a breakdown back towards 19,000 and even back towards this monthly level at 18,376. Now it is okay, because you are seeing this message right here, it must be defended. It is okay if on the daily and weekly we break down to this level and start trading under it. The only thing that matters is the monthly candle. Any monthly candle does not close under 18,376. Okay, does not close under that low. If that happens, then it's very likely that these lows down here will ultimately be taken out. Now, it may take a month or two or even three, but the probabilities increase dramatically if you get a monthly candle closure under this level, that these lows are unlikely to hold. It's very important that ideally this consolidation here holds for current price action. Okay, that's the healthiest structure you can hope for if you want the continuation to the upside to ultimately get back towards 25 and potentially towards 28 and 30. Now, if you are a bear, your goal is to take this out as soon as possible, as powerfully as possible. That is your goal. So you will push this as far down as you possibly can to take these levels and try and hold until a monthly candle closes. That is got to be your goal if you are bearish. Okay, but now short-term target 21.5, potentially a move towards back to 22, and that's the pretty much my short-term red zone of a reversal back down, and then we'll see what kind of price action we get from there. Okay, all right, guys, that is it for the recap. That is it for the overview. Again, if you are interested in any of the services, make sure to check out that description below. And if you want to be here live, I do it almost every day. I do a live stream almost every day, and I definitely do this overview every weekend, Sunday or Saturday, whenever I can. And it's free for everyone to just hop in here and listen to what I gotta say. And after the overview is done, we often just sit around talking about stuff, charts and such. So you feel free to join, hang out with us. I'd love to hear your opinion on things, and always leave a comment on the video because I usually get to those. I'll respond the best I can. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care.